Find out why there was so much selling. Julia Lee joins us from Bell Direct. Julia, good to talk to you. Quite a tumble for the Aussie share market today. What was behind the losses? And if I could ask you, would a lot of people be viewing this as finally the buying opportunity?
Friday, it was a pretty terrible day on the Australian share market, and there is two ways to look at it, and I guess one that a lot of investors are making losses, or the other side of the coin is that prices are a lot cheaper than they were last week. In fact, we've seen a fall every single day this week, and at the moment the market is tracking for about a 6% gain, 6% loss for the week, and we've still got Friday to go. Today is also the 80th anniversary of the 1929 stock market crash, and I guess today's performance has been better than 1929, where we saw 3 days of heavy losses, but not a very good week at all. It has been driven by the US market, and what's going to be important tonight are the GDP numbers coming out of the US. And at the moment, the consensus is for growth of 3.2% annualized. That's looking a little bit too optimistic at this stage, and the market's going to be very closely watching those numbers. We've also seen numbers out of the region today, and in Japan, we got a reading on industrial production. They were positive. The 7th month of gains in these numbers, up 1.4% in September, but all over not really having much of a dent, making much of a dent on our market at all. If we have a look at sectors which did well today, they were the defensive areas, so the telecom as well as the healthcare sector managing to finish in the black, but the majority of sectors did finish lower. The worst sectors were the property sectors, the material, the energy, as well as the financial sectors, with the banks making some heavy losses. In terms of individual stocks, we did see Flight Centre bucking the trend. It had a good day, up by 3.7%, and it gave a pretty good outlook, so that supported the stock. Coca-Cola Amatil also up by almost 1%. It's had a successful bond issue in the US, but Paladin shares dropping substantially, down by almost 5% after cutting its production outlook. So altogether, not a good day for the market. If we have a look at where the market finished up today, we saw the market finishing up at 4,574 points, and that's quite significant because that's also near the close that we saw on the 5th of October, and we saw a close there of 4,573 points. So the market is paying attention to the technical levels. Also, if we have a look at the Fibonacci retracement level, this is over the last 2 years on the ASX 200, you'll notice that we've come back to that retracement point a number of times now. So looking pretty significant for the market. It's all up to the US tonight, and we'll be watching those GDP numbers very closely out of the US.
Sure will be. And Julia, just quickly, ANZ, those results, better than expected, yet the shares taking part in the broad sell-off.
ANZ, the profit result came in better than expected, so cash profit came in at $3.4 billion and consensus was $3.1 billion, so a tick to that cash profit result there. We also saw a very strong net interest margin, so that was good to see. The net interest margin came in just under 2.3%, so that was up by 28 basis points. The dividend was also quite good. The Tier 1 capital very strong, 9.5%, so ANZ, I guess, looking to do more acquisitions around the region. It's already spent $2 billion in the last 3 months, and the market's watching very closely to see what other acquisitions it makes around the Asia Pacific region. It's aiming to get 20% of its income from the Asia Pacific region, so working towards that goal. Its outlook was also a little bit more upbeat than we heard from National Australia Bank yesterday, but in the year to date we've seen the shares rise by a massive 52%, and since the low that we saw in March, the shares have risen 82%. So given the very good performance not only by ANZ but the other big banks, we are seeing a bit of concern over valuations, and we are seeing a sell-off. Now, Citi has come out and upgraded ANZ from a hold to a buy, so some positive ratings coming out of brokers after that result. If we have a look at ANZ's share price, this is in 2009. This is what it looks like, and you can see that the banks have started to be sold off this week. ANZ was no different. It lost more than 2%, but pretty much in line with market performance.
And Julia, what about AGL Energy? Managed to have quite a good day on the back of that profit upgrade?
AGL Energy did have a good day. It was up by 0.9%. All up, it was a good day for defensive sectors, and of course utilities also outperforming the general market. Now, it did manage to upgrade its profit expectations. So for the full year, it is expecting profit growth of 10.9%, and it is predicting that net income will come in between $390 million to $420 million. So all up, really increasing that range by $20 million today. Also, the market's going to be very closely watching this stock to see whether it raises equity. We know that the New South Wales electricity assets will probably be sold off by the New South Wales government. AGL Energy is pretty keen to participate in that sale, so it'll probably have to look at raising equity in the coming months. So it is a stock to watch. If we have a look at AGL Energy shares in 2009 so far, though, its shares have been up, down and everywhere, but really in the year to date underperforming, down by 9%, and that's because defensive stocks really haven't been in fashion on the market. But with the market now falling, these defensive stocks should outperform the broader market.
Julia Lee, we always appreciate your analysis. Thank you so much for that.
Thanks, Roddy.